So you want to sell your home. You need to sell your home, but I don't know, the home you're going to buy, it could go down in value. I mean, we all know homes are going down in value, right? What's a person to do? In this video, we're going to talk about what a person's going to do. I'm Mike Zahn with Metro Phoenix Living at eXp Homes, and in this video, we're going to take a look at the logical reasons to sell now or not to sell now, and see what might make sense for you. If you like what you see, drop a comment in the comment section down below, because I will answer, because, well, that's how I roll. Let's get started. So, like I say, you want to sell, but you're just not sure whether or not you should. So we're going to look at it with the logic of the question, not the emotion of the question. The logic of the question says, now, if I buy a home now, the home might go down in value. Well, that's a bad thing, right? Well, sure. But if the home you're going to buy goes down in value, what's going to happen to the home you're currently in? It's not going to go up in value. It's going to go down in value too. So that makes a bad situation worse. So what happens is you have less equity in your home when you go to sell it later than you would if you sell it now. Right now, home values are still up 12% from a year ago. That's a nice healthy gain. People have equity. When you sell that now, you get a bigger chunk of money for a down payment on your next home, and you might have money left over to stick away in the bank as a rainy day fund and kind of cash out your current home. It's a good way to go. So let's take a look at the flip side of that equation. You sold your home and you're buying another one, and guess what? A year later, the value of that home has gone down. You were afraid that was going to happen. Well, again, that's your emotion talking. Yeah, it's not good when the value of your home goes down, but if you look at it historically, home values go up and they go down and they go up and they go down, but they keep going up higher. And the problem is, if you try and time the market and buy it just when it's exactly at its lowest point, you can't do that with real estate any more than you can do that with stocks. Now you realize it could go down in value in the short term, but unless you're going to sell the home in the next year or two, you're probably going to be just fine if you wait 3, 4, 5 years to sell that home. It's nothing to be afraid of unless you're going to sell in a year or 2 or 3. And if that's the case, why are you moving anyway, right? So, next question. Let's look at interest rates. What's going to happen with those? Interest rates are too high to buy a home now, right? Well, yeah, they're pretty high. Historically, they're not overly high. 7% is within the normal range over the last 20 years for interest rates. We've been spoiled for the past 5 or 6 or 7 years with interest rates that have dipped down as low as 2.5%, 3%. That's not normal. Okay, we can't expect them to go back down to 2 or 3%. Those days have come and they've gone. They may come again, but not in many, many years. So what we're likely to see is rates hovering in the 3.5% to 5.5% range over the longer period of time, but that's still down from the 7%. So finally, let's look at interest rates. Interest rates are high right now. If you buy now, you're going to have high interest rates, right? Interest rates we've been spoiled with in the last 3 years. They've gone down to 2 to 3%, and guess what? That's low, and it's lower than they're likely to go in the near future. So what that means is we'll be more in a normal interest rate environment, 3.5% to 5.5% over the coming years. And now everybody thinks, oh, the Fed's raising interest rates. They're going to raise them in December. They're going to raise them in January. They're going to raise them in February. And that's all true. They will. But we're assuming that interest rates on mortgages are tied to the federal funds rate, which is what they're raising. And while I can't say they're unrelated, they're really not tied that closely. What they are tied closely to is the 10-year Treasury yield. If you take a look at the graph of the 10-year Treasury yield and graph of mortgage interest rates, it's very interesting. Here's that graph. Take a look at it. In that graph, you'll see the top line is mortgage interest rates. I mean, it's uncanny how closely they follow one another. Right now, we are in a period of uncertainty, and the spread between mortgage interest rates and the 10-year Treasury is at about 2.5%. Normally it's like 1.25%. So the spread is higher than it normally is. That would imply that the mortgage interest rates are going to come down from their current level another point or so. So from 7% down to 6%. That's going to help. What will also help is as this chaos unfolds in the world, and I hate to say it, but as we head into a recession, as more and more people are laid off, as other countries head into recession, as inflation continues to roar throughout the world, people get scared and there's uncertainty. And when there's uncertainty, where do they invest their money? They come to the United States and they buy U.S. Treasury bonds. So that 10-year Treasury bond goes up in value as more and more people are wanting it. And as the value of the bond goes up, the underlying interest rate is pushed farther down. As that's pushed farther down, what's going to happen to mortgage rates? You're right. They're going to be pushed down too. And that's a good thing. It means you can buy a home right now with a high interest rate, no fun, but you have a good chance of being able to refinance in a year or two as interest rates are likely to come down. So in summary, if you wait to sell, you're probably going to have less equity. That means less down payment money, less money to put aside in the bank. You're probably going to not save yourself a lot of risk because the home you're going to buy is going to go down in value, but so will the home you're going to sell. Either way, you're going to lose money on your home. So you're not taking a lot of risk because that home you bought, even if it goes down in value, is likely to march up over time. History tells us that. And the interest rate, while it's high right now, in a couple of years, there's a very good chance you'll be able to refinance at a lower rate and get that payment down to where you want it to be in your home. I hope you've enjoyed this video, and if you've gotten any value from it, please feel free to book a call with me in the Calendly link down below, where you can pick a time, set it up with me to have a one-on-one conversation about your specific situation. Or take a look at my website right here, metrophoenixliving.com, to see the homes that are available and what they're costing right now. It's the most up-to-date site in the Valley, updated every 5 minutes. I appreciate you watching me here, and I will see you in my next video. Thanks.